Good day everyone, my name is Justin Kenneth Longyapon from BSBA Major in Financial Management. So I am going to tackle about the Module 5 LG4, which is the Maintaining a Checking Account. So let's proceed. Maintaining a checking account is a practical guide for college students and new account holders how to choose, open, use, and protect a checking account. Real-world examples, step-by-step procedures, and common fees explained so you can manage money confidently and avoid costly mistakes. So, ang checking account daw is a type of a bank account na pwede na itong ma-use for our everyday financial transaction, such as pag-deposit of money, withdraw of cash, paying bills, and also making purchases. So for us college students, having a checking account can be useful because it gives us safe and convenient place para makip nato o ma-manage ang ato ang kwarta. For example, instead na ikaw kay magdadala kag 5,000 cash, pwede naman siya i-keep sa imuhang bank account and use a debit card or online banking when we need to pay for something. So maintaining a checking account is not only about opening an account. Pwede sa natong mabalaan kung usaon paggamit ani properly, protect our account information, o ma-aware ta sa mga possible bank fees. For example, if we don't maintain the required balance or make a certain transaction, ang bank may charge us a fee depending on its rule. So, the main goal of this topic is to us help understand how to manage a checking account properly, avoid unnecessary fees, protect our money, and become more responsible in handling our finances. Imagine, for example, as a college student which is na kayo ma-receive na 5,000 para sa imong monthly allowance. Instead na i-keep nimo ang tanang 5,000 in cash, pwede naman siya i-deposit into your bank account. Then pwede na nimo siya use your debit account para magpalit ka og school supplies, withdraw cash when necessary, pwede sad for paying bills or online purchases. Pwede sa nimo i-check imuhang balance through mobile banking. Pwede nimo siya i-keep track kung pila na lang ang nabilin sa imuhang kwarta. If you regularly check your transaction and avoid unnecessary fees, you're properly maintaining your account. So simple way to remember, checking account is equals to keep plus use plus protect and monitor your money. So we always remember that checking account helps us safely manage our everyday money, but we also need to use it responsibly, monitor our transaction, and protect our account. So let's proceed to the next slide. Why a checking account matters. A checking account turns messy cash flows into organized finances. Like David, who uses account to record payments from customer, your account provides a single place to deposit checks and cash, track income and expenses, and build reliable financial records for budgeting, taxes, and future credit. So let's proceed to the first one. Track income accurately. Deposit every payment promptly and record it in your ledger to avoid missed and or forgotten payments. This means putting the money you receive into your account and keeping a record of it. This makes it easier to know how much money is coming in and prevent you from forgetting payments. For example, if naa kay small selling online business o ga-earn kag 2,000 from sa imong mga customer, so pwede naman siya i-deposit ang imong kwarta sa imong account para ma-record ni siya as a income. So next, let's proceed to the next. Simplified bookkeeping. Monthly statements create a clear record for tax and planning, less hassle than informal cash log. So a checking account automatically provides a bank statement which is ga-show sa imong transaction. This make it easier para ma-review nimo imong income and expenses instead na mag-rely lang ka sa mga handwritten notes or imo lang gina-remember kung asa naabot imong kwarta. For example, if mag-spend ka og 500 for school supplies, 300 sa food, and 200 para sa transportation, pwede nimo ma-check imong account statement to see this transaction o ma-understand nimo kung asa naabot imong kwarta. So, a checking account matters because it helps us keep track of our income and expenses, making our finance more organized and easier to manage. So, let's proceed to the next slide. Choosing where to bank. Convenience, service, cost. Pick a bank or credit union based on branch and ATM location, hours, mobile and online features, fees, interest rates, and customer service. Convenience is important, but compare costs and protection like FDIC insurance before deciding. So, where should you actually bank? Picking the right financial institution comes down to balancing three main pillars: convenience, customer service, and overall costs. So let's break down each of these three key factors. So let's proceed to the first factor. Location and ATMs. Know where fee-free ATMs are and how far branches are from your home or campus. Physical access and digital features matters immensely. You need to look at how close the bank branches are to your daily routine like sa inyong school or sa inyong balay. And check their operating hours. More important, check their online banking app capabilities and where their fee-free ATMs located so you can access your cash easily without paying extra charges. For example, imagine it's late at night o ikaw urgent nimo na kinahanglan og 1,000 cash for emergency project supplies. Pero pag imuhang bank kay naay 24/7 ATM, pwede ra ka maka-withdraw quickly with zero fees. Pero pag imuhang bank walay ATM nearby, need pa nimo mag-commute og layo or magamit pa ka og another bank ATM which charges you an extra 15 to 18 pesos. Convenience fee for every single withdrawal.
So the next is the customer service. Good support saves time when problem arise. That's online chat, phone hours, and branch replacement desk. So quality support saves you time and stress whenever an issue arises, such as a block card or floating transaction. For opening account, test out their responsiveness, check if they have 24/7 hotline support, an active online live chat, or quick in-branch customer assistant.
For example, imagine, mag-try ka og pay para sa imong groceries using your debit card. Pero nag-glitch ang app. Nag-deduct sa imong account og 1.5 pero giingon sa cashier na ang payment daw failed. So, a bank with a great customer service will let you resolve this immediately via a 24/7 live chat or hotline within a minute. Whereas a bank with poor support might make you wait days or queue you in a crowded branch just to file a dispute. So let's proceed to the third factor, fees and rates. Compare monthly service charges, per check fees, ATM fees, and interest on balance before you commit. So, always compare the hidden costs before committing. Look at monthly maintenance fees, per check fees, out-of-network ATM fees, overdraft charges, and interest rates on your deposit. Beyond fees, make sure that the bank is protected by the government insurance, like PDIC in the Philippines or FDIC in the US. So your funds are safe if the bank faces financial trouble. For example, suppose Bank A offers a completely free student account with no minimum balance requirement, while B, on the other hand, charges a 300 monthly fee if your balance drops below 2,000. If you're a student keeping a tight budget of 1,000, Bank B will drain your balance through penalties while Bank A keeps your money completely intact. So, don't just pick a bank because it's famous. Choose the one that has accessible ATMs near you, helpful customer service support when problem happens, and low maintenance fees so you don't lose your hard-earned money. Let's proceed to the next slide, which is the cost of a checking account and what to expect. Banks commonly charge monthly services fees, per check fees, ATM fees, and return check fees. Minimum balance rules and daily balance calculation can trigger charges, even if your average balance is higher. Return check fees typically range to 25 to 30 pesos. Stop payment fees, 20 to 35 pesos. So let's examine the actual cost involved in keeping a checking account. While checking accounts offer great convenience, they can also come with hidden charges if you aren't careful. Understanding this allows us to manage our accounts smartly and avoid unnecessary deduction. So let's look at the two main categories of charges. First is the typical fee structure, such as base monthly fee, per check charge, ATM, or phone transaction fees. These are the routine, recurring fees that banks charge for basic account maintenance and everyday usage. Monthly fees apply unless you meet the specific waiver requirements, like maintaining a minimum balance, while per check or transaction charges apply every time you write a check or use a specific services. So for example, imagine if ang imuhang account with a base monthly service fee of 425 pesos, but the bank waives it if you maintain a required daily balance like 10,000 to 25,000. If ang imuhang balance dips below the minimum for even one day, ang bank mag-trigger og 425 pesos penalty. Additionally, if you issue 4 papers check a month with a per check charge of 15 pesos each, That's an extra 60 pesos deducted directly from your account balance just for routine payments.
Other costly items: return check bound fees, stop payment orders, out-of-network ATM fees. These are penalty fees or special service charges triggered by specific event or mistake. Bounce check fees occur when you issue a check without enough funds. Stop payment fees are charged when you request the bank to cancel a check you issued. And out-of-network ATM fees are penalty for using another bank cash machine. For example, imagine, nag-write ka ang check for 2,500 pesos para mag-pay og vendor, but nara kay 2,000 sa imong account. So the check bounce and the bank hits you with a 1,500 pesos return check penalty on top of your existing shortfall. Or suppose you lose a signed check and call the bank to place a stop payment order which is nag-charge mo around to 1,100 to 2,000 pesos just to cancel that payment.
Lastly, using an out-of-network ATM overseas or through special channels can add an average fee of 170 pesos per transaction. So, always keep track of your account balance in pesos and read your bank fees scheduling. Failing to maintain a minimum balance or making a simple mistake like bouncing a check can lead to costly penalties very quickly. So let's proceed to the next slide. Individual versus joint account. Deciding between separate individual account, a joint account requiring both signature, or a joint account allowing either person to write check. Joint accounts can reduce fees and provide supervisorship benefits, but clarify ownership rights when opening the account. So, when opening a checking account, you have to decide whether you want sole ownership or shared ownership. Choosing the right ownership type depends on how much control you need and who you're managing money with. Let's look at the three main options shown on the screen. So let's proceed to the number 1, individual account. Only the owner can write check, best for personal control and clear responsibility. So an individual account is owned by just one person. Only your signature and authorization are valid for withdrawing funds, writing check, or making transaction. These give you total independence, clear personal responsibilities, and completely privacy over your finances. So for example, imagine na kayo ma-receive na 1,000 or 5,000 monthly allowance or na kayo ma-earn na 15,000 from sa imong part-time job. With an individual account, ikaw lang ang maka-access or makagasto ani na kwarta. Walay lain or not even your roommates or family members can withdraw funds or sign a check gamit imuhang account.
So let's proceed to the next, the joint. Either party can transact, convenient, but both are fully liable for account activity. It's also known as an OR joint account. This allows that any account holder to deposit, withdraw, or write check independently without needing permission from other person. While highly convenient, both owners are 100% legally liable for any activity, including overdraft or bound checks.
For example, imagine two roommates opening a joint account para magbayad sa ilahang rent and utilities, depositing 10,000 each. Roommate A can easily withdraw 5,000 gamit iyang own na signature para magbayad sa ilang landlord. However, if ang roommate B secretly spends all 20,000 para magpalit sa iyang personal gadget, the bank allows it, and both of you remain responsible for any missing funds or fees.
The third one is joint both signatures. So it requires both signatures on check, offers extra control but less common for everyday use. So it also known as A&D joint account. This requires all accounts holders to sign every check or approve every major transaction together. It provides maximum security and dual control, but it is less convenient for daily expenses because both people must be present or agree on every payment.
For example, imagine na isa ka student organization or isa ka small business partnership na nag-open og account para mag-manage og 50,000 event budget. Para ma-prevent ang isa ka person from misuse, ang bank kay ga-require siya og both the president and the treasurer na mag-sign every single check before funds can be released to a supplier. So, choosing an individual account if you want full personal control or an OR joint account for convenient shared. So, Choose an individual account if you want a full personal control, or an OR joint account for convenient shared expenses, or an A&D joint account if you need strict dual authorization. So let's proceed to the next slide. How to open an account. And first step. Opening is a straightforward. Provide name, birth date, SSN, address, phone, ID, signed signature card, and make an initial deposit. Receive temporary checks and a checkbook ledger. Immediately set up online banking, mobile alerts, and note to bank hold policy for deposited funds. So, through the actual process of opening a checking account, getting started is very straightforward, but following the proper initial step ensures your account is completely secure and fully operational from day one. Let's look at the 3 main steps shown on the slide. The first one is complete application. Bring government ID and your social security number for identity verification. To comply with banking laws and verify your identity, bank require basic personal information such as your full name, birth date, home address, phone number, a valid government issued ID like passport or UMID or driver license ID, and your tax ID or social security number. You will also sign a signature card that the bank keeps on file to verify future checks you write. For example, imagine walking into a bank branch to open your first account. You will present your password along with your TIN or SSS number. Fill out a 2-page application form and sign a physical signature card twice so the bank knows what your official signature looks like. So let's proceed to the next step. Make initial deposit. Fund can be cash, check, or transfer as about holds on deposited check. Most checking accounts require a minimum opening deposit to activate the account. You can fund this using a cash, a check, or a bank transfer. It is also critical to ask about the bank check hold policy because deposit check usually take 1 to 5 business days to clear before the money becomes available for withdrawal. For example, suppose you open your account with an initial deposit of 3,000 cash and a 5,000 check from your part-time job. Ang 3,000 cash is immediately available in your balance, but because of the bank 3-day hold policy on check, you cannot spend the 5,000 check money until it fully clear the 3 days later. So the third step is the setup access. Register online, enable mobile deposit, and set alert for low balance and large transaction. Once the physical account is open, setting up digital access is essential. Register for mobile and online banking immediately so you can monitor transaction, enable feature capabilities like mobile check deposits, and configure security notification for low balance or unexpected charges. For example, pag human nimo open sa imong account, nag-download din ka og bank's mobile app sa imong cellphone para ma-set up nimo ang security notification which is nag-send og SMS or push alert whenever your balance falls below 1,000 or whenever a transaction over 2,000 is made, ensuring you spot unauthorized charges immediately. So, opening an account requires submitting a valid government identification, funding your initial deposit, and setting up instant security alerts on your mobile phone to monitor your money right away. So let's proceed to the next slide. Record keeping and reconciliation. Keep your checkbook ledger up to date. Record checks, debit purchases, ATM withdrawals, deposits, and automatic transfers. Reconcile monthly against your bank statement to find outstanding checks, deposits in transits, bank charges, and interest. Reconciliation prevents overdraft and catches errors early. So, keeping an account isn't just about depositing and spending money. It's also about maintaining accurate records through bank reconciliation. Reconciling your account means comparing your personal transaction records against the official bank statement to make sure both balance match. This practice prevents costly overdraft and helps catch banking errors or unauthorized charge early. So let's look at the 3-step process shown on the slide. So first is the record. Keep your checkbook ledger up to date. Record check, debit purchases, ATM withdrawals, deposit, and automatic transfers. Every single time you make a transaction, whether writing a paper check, paying with debit card, making an ATM withdrawal, or receiving a direct deposit, you must record it immediately in your personal log or checkbook ledger. Do not rely solely on your memory or real-time app balances, as pending transaction might not show up right away. For example, imagine, nag-issue kag paper check worth 3,000 pesos para sa imong monthly room rent and make a 500 debit card purchase at the bookstore. So, you immediately log both amounts sa imong ledger. Even if the landlord kay wala pa nag-encash sa 3,000 check na imong gibayad sa iyaha, your personal ledger accurately showed that naapa kay 3,500 less sa imong usable funds. So, the next one is the compare. Reconcile monthly against your bank statement to find outstanding check, deposit in transit, bank charges, and interest. So at the end of the month, take your official bank statement and compare every listed line item against your personal ledger. Look for discrepancies such as outstanding checks, deposit in transit, or unexpected bank fees. For example, when your monthly bank statement naabot na, na-notice nimo na imong ledger balance is 10,000 pesos. Pero ang nakabutang sa bank statement kay 13,000. By comparing the two line by line, you realize that the landlord hasn't encashed your 3,000 check yet, which is ang imong 3,000 is an outstanding check, meaning your actual available balance is indeed 10,000, dili 13,000. So next, the third one is adjust. Reconcile promptly after receiving your statement. Typical discrepancy causes outstanding check, unprocessed deposits, bank service charges, or interest not yet recorded in your ledger. So after identifying discrepancies, adjust your personal ledger to reflect valid bank transaction. You have missed service charges or interest. If you spot errors made by the bank or unauthorized fraudulent charge, report them to your bank immediately. For example, during your monthly review, you see that 150 pesos monthly bank service fee and a 12 pesos of earned interest on your bank statement that wasn't in your ledger. So you adjust your ledger by subtracting the 150 and adding the 12 pesos, bringing your personal ledger to an exact match with the adjust bank balance. So always track your transaction in your own ledger, compare them with your monthly bank statement to catch outstanding items or errors, and adjust your records promptly so you never spend money you don't actually have. So let's proceed to the next slide. Overdraft, protection, and stopping payments. An overdraft occurs when transactions exceed your balance. Banks may return check and charge penalties or cover them with the overdraft protection. Protection options include an overdraft line of credit or automatic transfer from savings. Stop payments order block specific check but usually carry fees. So, an overdraft happens when you try to spend more money than you have in your account. The bank will either bounce your payment or cover it using protection features. Here are the three main options on screen. First is drop line on credit. It is an instant loan for overdraft. Fees or interest apply, often in mixed increments. So the first is overdraft line of credit. Instant loan for overdraft. Fees or interest apply, often in fixed increments. So it is a mini loan linked to your account that automatically covers shortfalls in set amounts, charging interest until repaired. For example, if nakay 2,000 sa imong account, ug na-try ka og bayad og 3,500 fee, ang bank daw kay automatically naga-lend sa imo og 1,500 para ang transaction kay mag-goes through. So next is the automatic transfer. Move funds from savings to checking automatically may have transfer fee but lower cost than loans. So, ang bangko daw kay automatically move funds from your linked savings account to checking to cover any shortfall. For example, if your checking account is short 2,000 for rent, the bank automatically pulls 2,000 from your saving accounts to pay it safely. Third is the stop payment. So, request bank to refuse specific check, usually 20 to 35 fee, not useful if check are lost or stolen. So, a request telling your bank to cancel a specific paper check before it gets cash for a service fee. Example, you issue a 4,000 pesos check for repairs, but the work is done poorly. So, you call the bank to place a stop payment so they cannot cash it. So, in conclusion, overdraft protection keeps your payments from bouncing, while stop payments to let you cancel a check before money leaves your account. So, let's proceed to the next slide. Special checks and when to use them. Certain transactions demand guaranteed payment, such as cashier check, certified check, and traveler's check. Use this for large purchases, out-of-area transaction, or travel where merchants require guaranteed funds. So let's look at the special check used when standard personal checks aren't accepted. Certain major purchases require guaranteed funds so that seller knows the check won't bounce. Here are the three main special check options on the screen. The first is cashier's check. Banks issue. Best for secure large payment. Bank withdraws the funds and guarantees payment. So a check drawn directly from the bank owns funds rather than your account, guaranteeing that payment completely. So for example, when buying a second-hand car worth for 2,500 pesos, the seller asks for the cashier check so they know that the money is 100% guaranteed by the bank before giving you the key. So next is the certified check. Bank verify the stamp your personal check, deducting funds immediately, used when seller need assurance. So your personal check that is the bank verified stamps and set aside money for immediately to ensure it clears. For example, when signing a lease for a new apartment, the landlord requires a certified check for the 30,000 security deposit to ensure that your account actually has the fund. The third is the traveler's check. Secure for travel and exchangeable for local currency, useful where cards are less accepted. So pre-printed fixed amount checks used as safe payment method during travel, which can be replaced if lost or stolen. For example, when traveling abroad to places with limited card acceptance, you use 10,000 worth of traveler check to safely pay for hotel bookings without carrying large wad of cash. So in conclusion, special checks provide guaranteed payment for major purchases or travel, ensuring that sellers receive their funds safely without any risk of a bounce check. So next slide, takeaways and glossary. So in summary, choose a bank that balance convenience and low cost. Open your account with the proper ID, keep accurate records, reconcile monthly, and understand overdraft options and special checks. This step reduce fees and help you build your financial confidence. First is account reconciliation. So verifying your balance and transaction against the bank statement. Second is cashier check. Bank guaranteed payments drawn on the bank used for secure transfer. Third is traveler's check. Pre-printed check for travel, often insured against loss. Fourth is the certified check. Your check stamped by the bank to guarantee funds or fees applied. Fifth is checkbook ledger. Booklet to record all your transactions and calculate a running balance. Sixth is the overdraft. When you write a check or transact for more than your available balance. Seventh is overdraft protection, an arrangement to cover overdraft. And the last is the stop payment. A bank order to refuse payment on a specific check. So, open an account with a loss, fees, and strong mobile tools. Practice monthly reconciliation and avoid overdraft to keep costs low while you build healthy money habits. That's all from my reporting. Have a good day, everyone. Bye-bye.